So think about, it's not just application completion rate or that step in the funnel is completed. Is it the real data? Is it the real person? What we're doing is we're eliminating all that scenario where it's actually the wrong information.
Welcome to Affiliate Marketing for Lenders. I'm your host, Carlos Caro. Banks spend billions of dollars per year advertising in affiliate channels. It's a complex, high-stakes game, and I'm here to guide you through it. If you're a lender that wants to grow your affiliate program, you're in the right place. Let's dig in. Today I'm here with Tomas Campos, CEO at Spinwheel. Prior to founding the company in 2019, Tomas was a consultant at Ernst & Young, an executive at the Blackhawk Network, a financial services company, and a founder at a conversational commerce company called FluidM that was later acquired by the Westfield Corporation. Spinwheel's mission is to make it easier to manage debt. Spinwheel's product caught my attention as I think affiliate marketers could use their product to reduce the friction in their application processes. Let's jump into the discussion. Tomas, good afternoon. Thanks for being on the show today.
Absolutely. Thanks, Carlos. Happy to be here.
So tell us about the problem Spinwheel solves.
So I'll start by saying we're on a mission to improve consumer debt in the United States and ultimately improve financial outcomes by removing all of the friction and all of the costs in that consumer debt lifecycle. And I'll give you some examples, but fundamentally the way we do that is we make it as easy as possible for consumers to share their information and make that same information actionable as they go through the entire process of finding, a loan or finding a financial product, applying for it, originating it, and ultimately paying it off. And, fundamentally what our product does is it increases transparency, it streamlines experiences for affiliates, lenders, and essentially any party that's engaging with that consumer as they go through that journey on that life cycle. And it effectively improves the cost and the performance of the products and the financial outcome of the consumer as well. And if it's helpful, I can give you some examples of that.
No, it's as you describe it, it sounds to me like you're serving consumers and you're also serving lenders. So I guess tell me about your ideal customer on both sides of the marketplace.
Yeah. So we don't do anything direct to the consumer. We offer all of our services to other companies and businesses. Typically it's going to be, let's say affiliates or marketplaces or financial apps and then the lenders themselves. But a great example is this. So if you think about sort of the typical customer journey, usually starts with hey, I've got I either know that I need a loan or maybe I've got a financial situation going on and I kind of want to figure out what's out there for me. And they're going to go to some resources online. And those resources could be either affiliate or marketplace or something like that, or maybe directly to a lender. But it all starts with, hey, tell me a little bit more about yourself or about the consumer. And today there's just a ton of friction there. A lot of times people are putting in the wrong information, either, on purpose or by accident. But then you also see a lot of things where people just drop off because they're being asked things like what their social security number is, or a lot of information either they don't have or are not comfortable giving. Mm-hmm. So what we do is right there at the onset is we just say, hey, let's make it really, really easy for the consumer to provide all this information, make sure it's accurate. And so that not only the consumer gets matched up with a better product, but the affiliate and the lender downstream actually get the real information for the consumer. And we do this because now the consumer can just put in a phone number, date of birth. We authorize that user. We authenticate that user, I should say. We pull back all the verified information, and then they can use that to streamline the application process, pre-filling a bunch of those fields, and then also being able to set that user up so when they actually go through that application process, everything's already ready to streamline there. So that's one example. Another example is, let's say that the consumer is moving through the application process and the lender is actually, the process of underwriting him. And let's say, very, very common use case right now is, let's say for a personal loan to do debt consolidation. Well, you want to know what the DTI for that consumer is going to be post-loan. You want to ensure that if it is, the stated purpose is for debt consolidation, that the funds of the loan are actually going to pay off the actual existing debt. Well, that's where once we've actually connected that user on the Spinwheel platform, paying off and directly dispersing the funds from that loan to any existing credit card or existing debt is a simple API call. There's no other information that's required for the end user. So we remove all that friction. We improve the process for the lender, improve the process of the affiliate, and ultimately the consumer at the end of the day gets a much better product.
Got it. So as you described that, I heard elements of matching consumers to the right products, but I also heard elements of once they've decided what product they want, getting that product frictionless.
Absolutely.
Which of the two is the primary business, or is it really the combination of both?
It's the combination, because the way we look at this is it's a journey, right? So if we, uh, the way I think about it this way, if we didn't solve the process of making it as easy as possible for that consumer to get to that product, we're still leaving a lot of issues on the table. So the very first thing is it sort of starts there. Like if we can't make it easy for the consumer to get to the step to get the product, we're failing. So that's where we typically see a lot of that start. But then it's really that last part too, which is like, hey, how do I make sure that this consumer is getting the best rates, the best product, and that we know that this loan is going to perform well? That's where we kick in with the ability to sort of make that direct disbursement and make sure that all the data that we just provided is easy actionable.
Got it. And who typically is your customer for like the matching side of the product? Is it fintechs? Is it affiliate marketplaces? Like who do you
Yeah, I
partner
would
with
say
on
it's
that?
really, it's sort of, I group our customers into two major groups. One is like any company that's helping users find these products or match up with these products. So that's going to be typically your affiliates or your marketplaces. We do have some, let's say, financial management apps that also act as funnels to, different loans and lenders. But then the other major group is going to be the lenders themselves, because either lenders are using this directly on their direct to consumer plays, or they're using this data as it's coming in from their affiliates and marketplaces to streamline that entire process for originating a loan.
What metrics do you look at to determine that you're kind of driving the right outcomes for consumers and for your lending partners?
It's a good question. It's interesting because, listen, like every company needs to make money, and it'd be easy to say, well, we just look at like revenue and how our growth is, but that can be very misleading, and sort of learn this the hard way a little bit. So really what we focus on is usage, accuracy, and trust. Those are the three metrics that we really anchor on to determine what our success and growth is, as well as the success of how our product is being used by our partners. Because the usage basically tells the whole story. Like if people aren't using it and they're not actually getting the benefit, doesn't matter how much they're paying you. That's not going to be, a good business. And then the other thing is making sure that the accuracy of the data, the accuracy of the actions is as high as possible. And then the fact that like these partners not only are using it, but they trust it. They're embedding it into their critical flows. They're embedding it into their main channels on how they're engaging with consumers. So those are the things that we look at to determine our success and growth.
Got it. Why did you start the company? Is there a story
Yeah,
behind the
there
founding
is.
here?
I will say it's been a little bit of a longer journey for us. I started the company. My co-founder and I, we were finishing up our previous company, and we constantly had a thesis that consumer debt was being underserved by fintech. And one of our the key things that we saw was, the only real sort of fintech that was being, I think, being used by a lot of consumer debt solutions was open banking solutions. What I mean by that is using Plaid or like MX or Yodlee to be able to connect to people's debt. And our thesis was like, hey, that just doesn't work. Like that's great when you're trying to connect to like one or two bank accounts, because that's, a lot of people have maybe one or two bank accounts. So putting a username and password once or twice is not a big issue. When you look at someone's debts, like it's not uncommon for the average American to have 10 to 14 different accounts. And so
Right.
asking them to put in 10 to 14 username and passwords is just way too much friction, and it doesn't work. So we had that thesis, and we kept looking at this, and our backgrounds have been around building really enterprise scale, like high performance, platforms and API networks. And what really made me take the jump here is late in 2019, in the summer of 2019, my niece graduated from college, and my sister, who at that time was also it worked for the federal government. They both had pretty negative experiences with their own debt, specifically student debt. So my niece graduated from college, and she was really distraught about how much debt she actually owed going to college. And then my sister, who by definition working for the federal government should have qualified for loan forgiveness, got rejected and couldn't buy a house that she was trying to buy. And so that for me really got me involved in trying to figure out how we can help them with their debt. And I remember my co-founder said like, hey, like we've been thinking about this for a while. Like you have a personal connection to this, like let's do it. And I said, sure. And so that was the genesis of the company, really just trying to figure out. And I will tell you, we spent about a good 6 months just doing a ton of research on end consumers, doing research with companies, trying to understand this space as much as we possibly could to understand really where like the problem and opportunities were, and how we could solve them.
Got it. How did you make your first dollar in the business?
Yeah. First dollar in the business, we launched a solution for a grocer in the northeast of the country, and they were extremely progressive. It was great, but what they were looking to do was, this is probably mid 2020, and heading into the pandemic, and people feeling really anxious about their money situations and their debt. And they had a program where they said, hey, you can use your loyalty points that you get from shopping every day at the grocery store. You can use your loyalty points to pay down yours or a loved one's student loans. And we powered that entire experience, and we found some amazing data. We were surprised that 40% of people were paying down debts for their loved ones, not even for themselves. And so our first dollar was powering that program, where they used our platform to be able to send funds and pay down people's student loans debts. So it was great. Felt great to do that.
Got it. So that was like a bank partner that sponsored it, or who was the client?
No, it was the grocer. So you could earn, let's
The
say,
grocer.
you could
Okay.
earn, let's say, 500 points every time you shop at the grocery store, and people are shopping every week. And so it was just the easy way to basically say, well, like, I shop here every week, and I can use my points to get something more than, let's say, like, a discount on my Cheerios. I could go and put, $5 towards my niece's student loans, and got really, really good reviews, and very happy the way that played out.
Is that a business you're still in?
So the answer is no. Reason being is, and I'm sure you can imagine, when you think about the fact that in 2020, they stopped all student loan payments, and you could say they've restarted, but even now there's still a lot of issues with that. The whole market for student loans just, completely went away during the pandemic. And so, one of the things we realized was like, hey, while this is a great product, we want to make sure that we could help people who have debt across credit cards, personal loans, auto loans, mortgages. That was always on our roadmap. We started with student debt because it was very acute and it was very personal to me, but we very quickly expanded to all. And then, when you look at the fact that no one had to pay student loans for 3-4 years, just the demand and usage wasn't as high as we expected as the years went on.
Interesting. So as I'm thinking about your business here, so matching consumers to the right products, eliminating friction in the lending context, highly regulated space, you're dealing with big organizations, the data is highly sensitive. So there's just kind of a number of sensitivities here. What I'm trying to understand is, what challenges do you have right now, or have you faced in building your business, and like how have you overcome some of them?
Yeah, I will say a couple of things. I think the markets have been interesting, to say the least. Like, we just talked about the student loan market and how that market essentially went away when people didn't have to pay their student loans back for years. But we also just went through a period where we had zero interest rate policy to interest rates climbing faster than we've ever seen. And then you had inflation, and you had all these sort of things where the cost of capital really got a lot more expensive for a lot of lenders. And so we saw lenders across the board, essentially pulling back a little bit, trying to shore up their portfolios. And so I think just the market has been interesting in terms of a timing perspective, but I think we're actually in a great position now. I think the other thing is, we're new and we're different. And so when you think about it, and let's say someone is looking at our solution for the very first time, they're like, how is this possible to do this with just a phone number and date of birth? And you just said it. They go like, so all I need is a phone number and date of birth, and I can do all these things in a highly regulated, highly, data sensitive environment. Like, is this for real? And so just kind of overcoming that at the very beginning has been something that's, I would say, is a challenge, but it's also a huge motivator for us, because it shows that we're actually onto something. We're actually solving a real problem, and we can do it in a compliant and secure and scalable way. So very, very excited about that.
Cool. I want to make your product kind of really land tangibly with our audience. A lot of the folks listening to the podcast are either fintechs or kind of larger organizations that do affiliate marketing as part of their acquisition strategies. So let's just say a credit card lender that does that has a media relationship with like NerdWallet. I'm just picking them out of a hat. There's nothing No specific reason I chose them, but it could be creditcards.com. It
Sure.
could be, any affiliate. And let's imagine that I source leads from that publisher through just a normal click out. Someone sees my card, they click out, and they land on an empty application form. That's my experience today. And I know that if I get my funnel to be more efficient, so if the revenue per click or the revenue per impression that I deliver to NerdWallet goes up, I get better placements, I get more volume. So I'm always thinking about how do I streamline
Totally.
my application flow. So if I went to you and I said, hey Tomas, how can Spinwheel help me solve that problem? Like, walk me through the mechanics of how you would partner with a lender like that.
Sure. So in that model, the lender would essentially connect to our platform. And what I mean by connecting to the platform is they would plug in our APIs. And when you talk through that journey that you just walked through, the very first thing that is required is we just need a phone number and date of birth from the end user. Now, that can be provided by, let's say, the affiliate, if they already have it, or they can ask the consumer for it. But once we get that phone number and date of birth, what we're going to do is we're going to do a very quick authentication on that user to make sure that this is a real person, this is their real phone, there's no fraud checks, all the stuff to make sure that it's compliant as well. Once we do that, we're able to retrieve on behalf of the consumer their personal information, including things like their first name, last name, addresses, social security number, etc. So right there, if you think about the traditional journey that you just said, you're typically asking the user to put all that information in somewhere. We've eliminated all of that. A great example here is with a lot of our partners, we saw that just asking for SSN, you saw anywhere from like a 20 to 30% drop off in the funnel for doing that. So you never have to ask that question anymore with us, right? We're automatically going to be able to pull that back with an authenticated user. The other thing that's happened though, as soon as we authenticate that user gets created on the Spinwheel platform. So now when you think about the journey where the consumer's maybe gone through an affiliate, they now have landed on that application page. Not only is that application page already pre-filled with all the relevant information, that lender now has the ability to call our platform with that same user token and say, hey, Spinwheel, I might need more information at this part of the journey. Can the user share this with me? That might be something like, what are the other credit cards that they have? What are the outstanding balances they have on those other credit cards? A good example that we see here a lot is using balance transfer as a hook, as a way to kind of get customers in for these products. Well, if you're running a balance transfer program, it's important for you to know what other cards they have. It's important for you to know what those balances are. And you also probably, the economics of your program depend on actually that balance being transferred. Well, now, since that user's already been connected and the application has essentially been shortened, you can say, okay, hey, Carlos, or hey, Tomas, let's transfer the balance from these three cards. We already know the exact balances. And that's now a simple API call that lender makes to us, or that credit card issuer on the back end, to say, these three cards, transfer the balances, complete the application, and you're done. Now you compare that to sort of what the scenario was before.
Mm-hmm.
Like you said, blank application, lots of drop off, no real visibility into the cards, no visibility into what their balances are. And if you went to the process of trying to get this, you're asking this information from the user, like, hey, can you go look at your statement, or can you go log in, or can you give me this? And if you're running a balance transfer program, most of the partners today basically are just cutting a check to the end user and saying like, hey, can you go deposit this into the accounts that you see fit? And maybe it's for more, maybe it's for less. You don't know if it's the right amount. So we just see tons of error, tons of costs in that entire process that we just eliminated while making that entire journey seamless for the end consumer.
Interesting. So you're not only reducing the application friction, you're also getting the lender in this context information for them to make the transaction actually more impactful to the customer.
100%.
Right? And like the balance transfer example. Okay.
Correct.
I have some questions here on where the data comes from, but let's just still level set on kind of the base construct here with the lender and how the partnership works. How does the lender pay you in this? Like, let's say you're partnering and you just delivered what you described. You're removing friction, and then you're enhancing the transaction with additional data and transaction capability. Are they paying you per transaction? Are you rev sharing in some fashion? Like, how does it all work?
Yeah, our typical model is they're paying us per transaction, and it's on a successful transaction. So, for example, if you're not paying for something you're not using, put it that way. or something it didn't work for a reason, you're not paying for that. It's only on successful transactions. Um, and our partners have control as to how far they want to go. So one of the things that we're very acutely aware of is that if you think about sort of just the monetization of that funnel, uh, your costs your costs are pretty high to acquire that user at the very top of that funnel. But your monetization is also pretty low because you haven't monetized it. So we try to do this in a way where we can actually mirror that entire funnel where you don't have to do everything. You can spend just a little bit just to get enough to get your funnel better. And then as you get to the middle of the funnel, at the end of the funnel, you can consume more of our services when you're ready to use them there. And you know you're actually going to be able to monetize and you have better visibility on what the unit economics of that product is going to be or that transaction. So we've aligned the usage, we've aligned our products to be able to sort of match every step of the funnel to make that happen. And so that's how we basically, we try to, make money every time there's a success at any one of those stages and align our interests with whoever our partners are, especially the lenders. We do have some rev share models. We've had some partners that have said, "Hey, can we go through this rev share model?" And we'll do that. I will tell you, it's something that we're willing to entertain. What I find oftentimes is that people want to actually try this out first so they can understand where this is going to play out. And so we typically see more people go towards the usage and the transaction model than the revenue side or the rev split. But that's not something that we shy away from.
In the example I gave earlier, that the blank page application form, I normally see like 30 to 40% complete rates when someone goes from an affiliate publisher to a blank page. What do you normally see is the lift of kind of powering an experience like a blank page with the Spinwheel API? Like how much should a lender expect to see on that?
So I will tell you, so the lowest we've seen is right around 20% lift. And that's the lowest, and that's from a very, very mature program that, I mean, they'd spent millions of dollars optimizing.
So that's 30 becoming 50 or 30 becoming 36?
No, that's 30 becoming 50.
Yeah. Got it.
So, and then we've had others. I would say that we've had others jump up to 85, 90%. And so I think some of this just depends a little bit on the maturity, but also, specific funnel. I will tell you, that sort of blank landing page scenario, when the user is able to land there and they see that their information is already there and they have to type it in, that removes so much of the friction and that drop off. And so, it's not unheard of for us to see people with 85, 75, between 75 and 85% completion rates at that step because it's already been provided.
Mm-hmm. Yeah. That's awesome. When you said 20%, I'm like, 36, that's really good. 30 to 36, but you're talking on a relative basis, like a 70% improvement. You're seeing something.
I mean, it's I will also tell you this, what some people forget too is that we also eliminate the scenarios where the information is just incorrect. So think about, it's not just application completion rate or that step in the funnel is completed. Is it the real data? Is it the real person? What we're doing is we're eliminating all that scenario where it's actually the wrong information. So one of our partners, I'll never forget this, they called it the Bart Simpsoning of the application. Mm-hmm. It's the people who come in and maybe put in a little bit that's correct or they put in the wrong, and they're just trying to see how far they can get. They're not necessarily serious. We eliminate that. And that just actually reduces a lot of that same cost too, because now you're getting leads or you're getting affiliates, or you're getting people sent to the page that aren't real. These are real customers and the real intent with real data. It's a sort of dual benefit.
No, that makes total sense. Yeah. So if this landed on my desk, I was the head of acquisitions at a lender, a CMO, I would be, just the first things that come to my mind is how much does it cost per transaction? We kind of talked about your model. I would be wondering what percentage of customers can actually, do you have coverage on? Because you're going to ask for name and phone number, or it was date of birth and phone number.
Yeah, phone number and date of birth, yep.
You're going to have a certain match rate. I imagine you're not going to match 100%. So I'd want to understand that. And then the third thing I would want to understand is what's the ask of me and my engineering and product team? Is this going to take 6 months to plug into you? So can you talk to those second and third pieces around the cover, the hit rate, and what's the ask of the lender to plug into the API?
Yeah. So in terms of the coverage that we're capable of, is about 98% of Americans. But what we see, I would say the blended effective coverage that we see across all of our partners today is right around 90%. And the delta between that 90 and 98% is oftentimes because people have put in the wrong information. So maybe someone put in the wrong phone number or they put in the wrong date of birth. But we're typically seeing around 90%. An additional sort of just level deeper than that is we do see differences sometimes between, let's say, where the source of traffic is coming from. So if the quality of the traffic is coming from, let's say, paid media, that it's maybe not very, very high, you're probably going to see your coverage rates maybe be more in like the lower 80s or the higher 70s. And sometimes that's because like those people just really don't have any intent and they're not going to put in even their phone number and date of birth. But if you have, let's say, high quality traffic sources that it's coming from, you're going to see that probably, in the mid 90s, because you're going to see just people who like, yeah, these are real people. You capture them with the right intent, but still really, really high coverage from that perspective. In terms of what it takes to plug into us, really, really simple. So we built this all through a very, very developer friendly API experience. All of our APIs are available online. We have a developer portal with like recipes and quick start guides that you can literally just copy and paste stuff and say, go. And we've had partners that have launched in, an afternoon. They had a, 2-hour conversation with us. We were giving them some tips and tricks. They tested it and said, hey, we're live, we're ready to go. So it can be that simple. But typically that integration really comes down to two things. One is figure out where you're going to slot in the user auth. And you may not even have to do that because that user auth may have already taken place. Let's say the affiliate, if you're the lender, if that's already happened upstream with the affiliate, you don't have to do that again. It's already coming in. You get a Spinwheel network token, that user already connected. But that's sort of one decision. And then after that, it's hey, here's the sort of laundry list of all the APIs we can call to get things like due dates or statement balances or card numbers or, make payments. At that point, you're just deciding where you want to put that in your funnel. So what we see is the integration actually doesn't take any time at all. The time we typically see is working with the partner, say, where in this funnel, where in this process do you want to turn these things on? And then helping them with, creating the best user experiences around that.
Got it. Like how many people do you normally see on the lender team working on this? Is it one engineer normally in a couple of weeks, or like what?
Yeah, that's typically about an engine. Yeah, that's about it. It's like it's an engineer, and total probably duration of time, it's probably like, maybe like between 40 and 72 hours, real development time, right? So,
got it.
Like I said, a lot of this is sort of just, it's not development time. It's hey, how is this going to look and feel, and how do so I would say it's from a pure integration, It's typically an engineer for a very, very short period of time. What we typically see is like sometimes like a designer, or let's say the product owner of the flow spends a little bit of time to kind of think about how they want to get this involved. But we have a bunch of best practices and guides that we can share with them to say, hey, here's what we're seeing. Here's what we see drives the highest conversion and best results. You can take that out of the box and just implement it that way.
So you're driving a ton of lift. It's not from an application, like from a marketing funnel. The application rates are going from 30 to 50, let's say. It doesn't take more than, let's say, a week for an engineer to plug in. I'm still seeing a lot of blank page forms in the lender affiliate world. So like what holds potential customers back from partnering with you guys? Like I'm trying to understand like where's there real friction here, and like how do you all deal with that?
For us in terms of friction getting out to the market?
Yeah, as far as sales and like adoption of what you built.
I think it goes back to kind of what I said a little bit earlier too, which is we're new. And so a lot of people just, anytime there's anything new, there's this, everybody kind of falls into a couple buckets, whether you're the early adopter or you're the middle of the road, or you're going to be the laggard. We're seeing folks who understand this and have implemented, we're seeing like fantastic success from them. So I think what we're seeing now is the early adopters have already proven this. We're starting to see a lot more folks who are jumping in and out saying, well, hey, we're seeing that over there. We're seeing that over here. Like, this seems like it's a fantastic product. So I think that's changing. But I think the biggest friction still is one of the things we found, and it's good, is a lot of the folks who own these funnels, they spent a lot of time and money on their funnel, perfecting it down to the pixel and down to the exact wording and copy, and A/B tested every, single aspect of it. These folks want to test it. They want to kick the tires. They want to say like, hey, well, if I add something new, is it going to change something, and are we going to see a drop? And what is that? So I think generally speaking, you have folks who just have a healthy skepticism of what's out there. But I think we're starting to see that change as you see more and more examples of what we're doing in the space, and people go like, wow, that's impressive. And you see the results and they go like, I want some of that. So
Got it.
I feel like that's in our favor, but there's still just that general friction of sort of just adoption and sort of adopting something new in the market.
I mean, I can imagine there's a feel of like maybe this sounds a little too good to be true because everything I've
That's
heard so
exactly right.
far sounds awesome. It's
That's
like
exactly right.
where am I gonna suffer then if I move forward here?
I would say it's funny you said that because literally had a conversation maybe 2 weeks ago where someone said that they're like, that seems like so good to be true. We haven't seen anything that's delivered that type of return or ROI. So like this can't be right. My answer is test it. Test it and let's see what you find out. And usually when people test it, they find really good things.
Tell us more about where the data comes from. So we, like totally get the concept here, but date of birth and phone number. Who are you? Where does that go? Where does the data come from? Like, walk us through the guts of the mechanism here.
So I see that's part of one of the things that makes us just really unique as a product and offering is the fact that we are, say, one of our sort of magic powers in this whole place is how we're able to go and connect to these disparate sources of data and pull it back on the user's request. So, for example, we integrate with technology that gets data from telco carriers and credit header data and public records and bill pay networks and payment networks and issuance platforms and loan servicing platforms. So if you think about today, the best way to describe this is if you think about today, if you were a consumer and you said, hey, I want to go get all these details on my debt, for example, you'd go to all these different places to go get it. Sometimes you might be going to like your statement data. Maybe you're getting it from like an e-bill, or maybe you're going and asking your lender, for it, such things. We've sort of meticulously gone through and said, okay, as a consumer, let's trace this and figure out where all of this is. And then let's use that user auth that we do at the beginning. Let's use that user auth as a way to ensure that one, this is the person who is who they say they are, and that it can be trusted in this sort of daisy chain across all the different data. And so today, all these data sources, if you think about where your debt information lives, we virtually have connected to all of those. And so it's bureaus, it's bill payment networks, it's issuance platforms, it's banking cores, the list goes on and on.
So are these soft inquiries that go out to the credit bureaus?
So it depends. You don't have to have a soft inquiry. If you are going to use our solution where you want to get a quick view of all the liabilities that someone has, we do a soft inquiry today. It is a soft inquiry that the user is requesting. So the way to think about this is instead of a lender doing a soft inquiry to determine eligibility or underwriting, we're actually doing the soft inquiry on behalf of the end consumer saying, hey, I want to go get my own debt. I want to see my own credit report and then share this so that you have an understanding of sort of, what my liabilities are and things like that.
Got it.
Yep.
So when I give you my name and my phone number and my date of birth, you're going to show me a consent that says I'm going to use this information to go do a soft inquiry on the bureau and to pull down all this information. Is that what I'm consenting to? Okay.
That's exactly right. Yep.
Okay.
Yep. It's exactly
one-time consent, or is there any ongoing nature to that consent?
It's a one-time consent, and the token we return back when we do that user auth doesn't expire. I think that if you look at the latest rules by 1033, there's the expectation that you're probably going to have to get that user consent at least on an annual basis. So I think from a compliance standpoint, what we're seeing out there is probably best practices to probably get that consent again on an annual basis. But yeah, there's nothing here from a technology standpoint where that token expires, that consent expires from a technology standpoint.
Got it. So if I'm out there listening to this conversation so far, Tomas, and I'm the CMO at a lender, I'm pretty intrigued here. Okay, like you have a unique data asset, you solve a real problem for me. I don't see a lot of options in the market that solve this problem well. And like I said, there's a lot of blank page application forms and like the marketing landscape for lenders. So if I wanted to go get my hands on this and play around with maybe a publicly available implementation, is like, could you point me to a publisher or a lender that actually uses this live in market so I can get a feel for how it actually works in real life?
Yeah, I would say one of the implementations that we think just they did a fantastic job is NerdWallet. NerdWallet launches as part of the personal loan funnel, and if you were to go there today, you most likely see that they just ask for your phone number, date of birth, in addition to sort of some of the other questions around like what your income level is. But that streamlined, that process. So I'd say, NerdWallet for the personal loan funnel, that's a pretty good one. I'd also say that, one of our partners at Achieve Financial has implemented this as part of their funnel. And that's, I think they've done a fantastic job with that as well. So there's probably two out there that I would say I think are pretty good. And you can always follow up with more that are either launching or comfortable with me putting the name out there.
Got it. For marketers at banks, like what else would you want them to know about Spinwheel that we haven't already talked about today?
So I think the other part that's, I think maybe has been implied, but maybe just to say it explicitly is, as we've built these tools and we get more, affiliates and marketplaces and more lenders, one of the things that we're able to do is we're able to help, these lenders actually get more and better placement or more better leads and connecting more and better consumers through these. So what we're seeing right now is that oftentimes, we're talking to our lending partner and they say like, hey, we're on Spinwheel. Do you have other affiliates that are also use Spinwheel so that we can have these users coming in connected fashion? And we say, yeah. And so we're doing these introductions and sort of helping the overall participants in this sort of network, connect and actually drive more value with each other. So I'd say that's one of the other, things we can do that in addition to sort of the technology that powers it all is just being able to help lenders really kind of engage with some of these different marketplaces that they haven't been before, or maybe we're just looking for better placement.
So Tomas, can you tell me a little bit more around other challenges you're seeing bank marketers have in their application funnels?
And this, and most do, but there's this interplay between reducing friction and potentially increasing fraud. And one of the big things we see today is when you get more leads through the funnel, or you are really, reaching a wider audience, the risk of fraud goes up also in the same sort of proportion. So what we see out there today is the ability to authenticate and also verify a bank account associated with an individual, and also get the balance that bank account has, is also really important. The challenge that most people have today related to this is that that's a really friction-filled process. If you think about how that's done today, you're typically either asking a user to upload statements, or you're asking them to connect through an open banking solution, which requires a username and password. And that, a lot of the partners we talk to, just throws a lot of friction in the process. There's a lot of drop-off. But if you don't do that, you're going to risk essentially opening yourself up to fraud. So what we do is we have the ability to, in addition to that phone number and date of birth that we've been talking about previously, we add an account and routing number. And with just those two additional pieces of information, we're able to go out and verify that the bank account exists, that the bank account is associated with the individual, that the bank account is in good standing, and then be able to go and get the verified real-time balance of that bank account. Now that right there is helping a lot of our partners eliminate that fraud. And a scenario here that we were just talking about with one of our partners is, a lot of times if they go and check these bank accounts, if they check that this bank account exists and they're associated with the individual, that's one step. But what they were missing was, if the bank account balance was zero, that oftentimes was a huge fraud flag. So what we're able to do, because we're able to go get that real-time balance for a good number of these accounts, they're able to determine what the bank account balance is. And what they've been able to do is correlate that to high fraud rates, because these are oftentimes maybe bank accounts that have been opened with, let's say, neobanks, and they actually have no funds. They're never intended. There's some stolen identity that they just did that. And then the money goes there, and then the customer sort of runs around with, or the applicant runs off with the money. So that's a big area that we see, and that's why we've sort of focused. We've decided to say, in addition to all the things we've been doing on streamlining the application funnel, can we streamline that process while also reducing the fraud? And so far, we've seen pretty good success rates from our partners.
Got it. I'm gonna play this back and make sure I understand what you're saying. So, are you saying that when lenders use Spinwheel to streamline their application flows, that 100% of the time you're going to go pull down bank account numbers, routing numbers, or only at the discretion of the lender where they sense like a higher fraud risk? I want to make sure
only at the discretion of the lender. Yeah, it's only the discretion of the lender. So if you think about the way we've been talking about this previously, you start with the phone number and date of birth, and that can streamline that top of the funnel. Then you may use additional data from us in terms of what credit cards you have, or the real-time balances of those cards, or be able to disperse funds directly to those cards. In addition to that, this is the discretion of the lender. They can say, hey, Spinwheel, I want to use your service where I provide a account and routing number, and go and tell me if this account is valid, it's in good standing, is associated with the individual, and what the balance of that is. So it really is at their discretion, and they can decide when to use that depending on what they believe maybe the risk profile or maybe where that lead is coming from. And I think that's what we've seen too, is that you may not want to do it for everybody, but for the ones that maybe are a higher risk lead source, maybe that's a good opportunity for you to do it. Most partners that we see, they have to go and do this bank account verification anyway, either because they're dispersing funds there or that's going to be the account that the consumer is paying back with. So it is something that we see gets a lot of usage, but is completely at the discretion of the lender.
Got it. And if I chose to do that additional check, am I asking the consumer for more information? Is the initial data call actually pulling that out from the beginning?
We're able to get everything except for the account and routing number. Now, preview, we are working on being able to get that account routing number automatically as well. We're probably 6 months away from that, but right now we do ask the lender to provide the account and routing number. Now they can do that by either asking the consumer for it, maybe they've already got it on file somewhere, but at the end of the day, for us, we're agnostic to where how they got it, but they provide that to us in addition to that user token that we created. We then go do that check, we return back the data and say, hey, this is a good account or not, or what the balance is of that.
Got it. Interesting. So one of the things that I'm curious now about, because I hadn't thought about fraud much in the context of what you've built, but my initial reaction to it was, well, if I show up and I give you my phone number and my date of birth, and you ping a database and then you fill the form for me, I'm only really getting through if I have the phone with me and I can validate the code, right? So that in my mind reduces the fraud risk materially. Is that what you see in practice? Like, do your lender partners tell you, hey, I actually see less fraud when I have Spinwheel enabled?
Oh, 100%. And
Okay.
so I think that bears a good sort of opportunity to dive into this, because you have the identity theft, right? And what we're talking about, what you just said, Carlos, is we greatly reduce or eliminate that because this is associated with an individual. We know who this person is, and we streamline that funnel. Valid people may still want to take the money and run and have no intention of ever repaying it.
Right.
And sometimes people don't care what that does to their credit. So what this additional bank account check does is it says, let me take a peek at your bank account. And one, let me make sure that you're actually giving me the bank account that's associated with who you say you are. And two, does this have funds in it? Because if it has no funds in it, maybe you're just at that timing where you didn't get a paycheck,
Right.
but there's probably a good likelihood that this is either a brand new account, you don't use this, you're not serious. And so that the lender can use to say, hey, maybe this is a fraud flag. Maybe they ask additional questions of that, but this gives that insight. So it's used in conjunction with that phone number and date of birth lookup on the individual. But those two things go hand in hand, because you may get the right individual, but that individual may still have maybe intentions to not pay back or aren't serious about your repayment of the loan.
Oh, makes total sense. A lot of lenders use the language short-term risk, long-term risk when they think about this problem. So they don't always use the fraud language when it applies to this, because it shows up on their P&L as a credit loss, because the valid individual that ran up a balance and just charged off very, very quickly, versus someone that thought they had the capacity for the loan, spent a year or two on the product, and then went bad later because of like financial stress or whatever. Like I think that's what you're calling out here.
Absolutely. Right? And I would say also there was recent legislation by the CFPB, I believe it's called the two-strike rule. So for small dollar lenders, the two-strike rule basically says if a borrower has two NSFs, two insufficient funds in a row, they're repaying a loan, but they get two insufficient funds in a row, that you have to automatically unenroll them from autopay. So this can be devastating for a lender, because you say, well, I've got you in autopay, and that's important because now I know I'm going to sweep the funds every single month to recoup the payment of loan. Well, if for whatever reason that borrower doesn't have the funds and it happens twice, you have to unenroll them, and then you have to go back to that borrower and say, can you please re-enroll in autopay? This is important. What we're able to do with our solution is also say, well, let's go check the balance. And maybe you've already got that one NSF. Instead of getting to that second one, that second one right after, you can check the balance and say, they don't have money around. Maybe we need to re-engage the consumer, and let's not trip that rule that says we have to unenroll them from autopay. So in addition to the fraud, this is another thing we're hearing in the market, that this can be really useful because it avoids that whole issue of having to unenroll users or borrowers when they have two insufficient funds.
Got it. Makes sense, Tomas. I'm going to move the conversation in a different direction now. Do you have any suggestions for bank CMOs on how to be more effective in their kind of these friction elimination type efforts? Like what are some of the common problems you normally see when you talk to your customers?
You mean the technical problems, or are you talking about like the internal, like how do they sell it internally?
Yeah, no, more so around if you take kind of a context of finding a customer in a marketplace like NerdWallet, um, what what are some of the opportunities you think lenders have to kind of improve the customer experience?
Yeah, the first one is just like I said. I think one of the things that is just taking the removing as much friction from the end user and that sort of cognitive load for the user to sort of figure these things out. So, I mean, how many times have you seen on these questions today? It's like, hey, what's your credit score? This is a great one because I've heard this several times. It's like the people who say they have high credit scores are often lying or don't know. And the people who say they have low credit scores often have to tell them the truth. But the reality is you're putting that cognitive load on the end consumer to do that. And then you're trying to use that as a way to sort of determine if they're going to be, a decent match with the products that you're offering. So I'd say the first thing is just take that cognitive load off of the consumer. Consumers have so much on their plate right now. It's one thing that it's hard enough to get them to start paying attention to this and participate in this experience. But if you're asking them to put a lot of information and take all these steps and find all this data, that's just a lot, and you're going to see a lot of drop off. So I think that's the very first thing that we see. And the second thing is really trying to make sure that, as the user goes through that entire journey, not just the application process, but as they go through origination and then the disbursement and then the repayment of loans, again, try to use the tools and services that make this as easy as possible, remove the fraud, remove the friction, remove the cost. And that's really what we're sort of all about. So, sorry if it's a plug for us, but that's what we're focused on is how do we really just make sure that we make that seamless across that journey.
I mean, I've been beating on the drum of eliminating friction here for like pretty much since I started this show. So it's kind of one of the pillars I hit with our clients as well. And we didn't talk much about my agency, but I spend 100% of my time advising lenders on how to create really great affiliate marketing programs. Yeah. And this topic of application friction comes up a lot. So
I can.
It's really good to know we could pick up the phone and call you guys and engage here if that
absolutely.
Ever came up. Yeah.
And Carlos, one other thing I would say, because it's interesting, you talk about friction. This is sort of a newer product that we launched because we heard so much from our lending partners, which was, hey, post application completion, being able to have people on sort of like this repayment, automatic repay, right? And there's some legislation and rules that have passed recently that have an impact on that. So a lot of our partners are like, hey, is there an easy way that you guys can also verify a bank account and that you could also verify the balance of the bank account? And so that's actually a product that we recently launched that's at the very, very end of that entire journey. Mm-hmm. But lenders really like it because it allows them to say, well, now I know that this is actually their bank account, that the bank account is accurate that I got, and I know the real-time balance of that bank account. If I can have that piece of information, it really streamlines the entire process in terms of how that repayment happens. Today, if you think about it, the consumer's got to go through all these processes to do it. And if they, if you do an ACH sweep and it doesn't have the funds, you got to represent, but then you got to make sure you stay under the limits for the NSF fees. Like that's a whole mess. And, because partners were telling us they're trying to remove that friction, we were able to solve that problem by adding this product. So this is an example of what we're kind of focused on to make sure we can really address the friction across the entire process.
Very cool. Well, Tomas, really appreciate your time today. You've been super transparent with us around what you're building, how lenders kind of have used what you've built in your APIs. This has been awesome. If folks here listening to the show want to get in touch with you, what's the best way to reach you?
The best one is that you can go directly to spinwheel.io on our website. You can get in contact with us there, or also feel free to reach out to me, Tomas at spinwheel.io.
Awesome, Tomas. Thanks so much for sitting with us today, and I look forward to following the trajectory of your company.
Awesome. Thank you, Carlos, for the opportunity. Take care.
So that wraps today's podcast. If you enjoyed the show, the most direct way you can support the podcast, if you're a lender, is by checking out New Market Growth. We're at newmarketgrowth.com, and check out our services. The other ways to support the show are simply by sharing what you heard today with a colleague, on social media, or with a friend. Thanks for spending the time with me here today, and I'll see you soon.